manufacturing labor and manufacturing overhead would be considered as variable cost. Fixed manufacturing overhead is not part of variable cost. So it means 10 is our 10 is our product cost under variable costing. While in absorption costing, you see 10 is the variable part, while 3 is the fixed selling and admin expenses, while, let's go back here. So you see here, 3 here. If you add all others, it will be a 6 here. So it means the fixed cost is going to be 150. Sorry, my mistake. Absorption product cost. So variables and fixed selling and admin is not a part of unit cost, is a part of period cost. So we are talking about product cost. So under absorption costing, fixed manufacturing overhead also be going to be used in absorption costing to calculate unit cost. So fixed cost is 150,000 and units produced 25,000. Answer would be 6. So look at the huge difference here. In absorption costing, we calculated our product cost as 16, while if we are applying variable costing, our product cost is 10. So it means profit is going to be higher in variable costing. Which kind of profit? Because we don't have contribution margin in absorption costing, we have only operating income, that's it. But here we have in between layer, that is contribution margin. So in variable costing, our contribution margin will be higher because cost is lower, right? So let's just talk about this. If you understand the concept of variable costing and absorption costing, please do calculate under each method unit cost using absorption costing and variable costing. So you don't need to read all the questions, just pick up the values here and do that. And if you want to read that, so please pause the video and read the whole question and let's solve this. Okay, so we already finished that. So let's compare the answer here. Here we go. Right? So in absorption costing, we include also the fixed manufacturing overhead as a part of product cost. So where we find out this 240, 60,000 divided by units produced, not sold. So many students, they made a mistake, and while finding out the cost, so they divided with units sold. No, cost is always about production, right? But selling cost would be depending on, when you find out the commissions, so that would be depending on the number of products sold. Variable cost, we do not include fixed manufacturing overhead costs, so you see the drastic change between the costing methods. 700 for absorption costing, 464 variable costing. Let's talk about our second learning objective. So prepare statement using both variable and absorption costing. So we're familiar with the income statement here. So we are not going into details, but let me show you here. So we are, continuing the same example of Harvey company. So they produced 25,000, but they sold 20,000. And the price was 30 each. There is no beginning inventory. So now let's compute net operating income using both absorption and variable costing. So in absorption costing, what is the form of income statement? Sales minus cost of goods sold is equal to gross profit. And from gross profit, you less selling and admin, you will find out operating income. So sales, 20,000 are sold, 30 each, we have 600,000. Cost of goods sold, what is the formula? Beginning or opening plus purchases minus closing, ending inventory. So they sold 20,000, it means they manufactured 25,000. So opening is 0. Production or purchase is 25,000. And 5,000 is your ending inventory. So answer would be this 20,000 multiplied by 16. Or you can use the extended formula for cost of goods sold. Beginning inventory plus manufactured or purchased, we call this good available for sale, and then you less ending inventory. So where the 16 came, we already see that 16 is the product cost under absorption costing. So let me show you. We have an activity to do in between. So I think maybe you forgot some. Let me just show you. Here we go. So we found out here that in absorption costing, let me clear all this mess. And in absorption costing, product cost was 16, product cost was 10 in variable costing. So let's go back to our original question. Right? So traditional costing, absorption costing, or full costing, sale minus cost of goods sold, we have gross margin. From gross margin, you less selling and admin expense, you find out net operating income. Since we are given segregation, so we write it down like this. Otherwise, if you write it down selling and admin in as a whole, answer would be the same as well. Right? And so we have a little note here where fixed manufacturing overhead is coming from. So you see 100,000 here. It's already given. And oh, okay, here. We'll talk about here. This. So under the variable costing, what is the formula for net income? Income statement. Sale minus variable cost is equal to contribution margin. From contribution margin, you less all the fixed and variable, which is period cost. So sale minus all the variable expenses. You see, we are not talking about variable costing per unit. We are talking about variable costing income statement. So you see sales minus all variable costs, which does include variable selling and admin. So many students, they are confused. Sir, we calculated variable cost based on direct material, direct labor, and variable manufacturing overhead. And you are including variable selling and admin expenses here. Why? Because we are making income statement, not the unit product cost, right? And income statement includes both product cost and period cost to find out profit. Guys, are we clear? So this point was a little confusing here, so I just explained that, right? So we have sales minus the variable cost. So variable costs include the direct material, direct labor. So we have direct material. It means direct material cost going to be the variable cost of goods sold is also a variable cost. So cost of goods sold units are 20,000 multiplied by the unit cost 10. So we have 200,000 here. So how they calculated 250,000 and 50,000? So they just calculated the opening plus purchasing minus closing, the CGS. CGS in units multiplied by the product cost. So in absorption costing, product cost was 16. In variable costing product cost was 10. So that's why we use 10 here. So we use extended formula for CGS. So don't just get confused. So in this case, we are not given the direct material. Otherwise, we would be also writing down here the direct material, direct labor as well. So we are not given direct labor. So we just write it down, the direct material, and that's it. Okay, so variable selling is also variable cost. So we also left it here. And this is not gross margin or gross profit margin. This is contribution margin. Gross profit margin is in absorption costing method, the traditional method or accounting method, which is also required by law. What is the formula? Sale minus CGS is equal to gross profit margin minus selling and admin. You will find out operating income. In variable costing approach, you use contribution margin approach, which we just finished in our CVP analysis. So we find out sale minus all variable cost and then all fixed cost. So did you see something? We have variable costing profit, which is lower. And we have absorption costing profit, which is higher. What is the reason? Our absorption costing is higher than the variable costing, right? Even then we are having high profit. Why? What is the reason? The reason is because of ending inventory. So ending inventory difference costing is, in variable costing it is 10 and absorption costing it is 16.